Welcome everybody to another Pepperstone live event talking about momentum and something we've seen a lot of recently, which has been a decent amount of volatility. Today we'll be, kind of unveiling some of the techniques that we use to go through and actually figure out how to get ahead of momentum. And of course, as usual, we'll be going through some live examples of the current markets, including the S&P 500, some currencies, and also some of the big metals moving right now. Ty, there's a couple of things setting up, isn't there, at the moment? And it's certainly set to be, I think, a big couple of weeks. We've got CPI, we've got earnings season in the US, and of course, we've got tariffs making a comeback. How have you been this week, and what are you seeing?
Yeah, welcome everybody. Yeah, look, every time the market quietens down a little bit, the magic word tariff comes stomping back. It's been a busy week when they're going to start to do that. Earnings season again is around the corner. Every analysis that we perform now in our streams has that magical E, just in front of it. So I think the markets are about to kick on. Look, they're at a very interesting level. There's no question about that. All the indices, a lot of the world indices are at all-time highs or very close to, prepping for the next move. I think this earnings season is going to be a really, really important one, Tom, given that it's probably the first one that we're going to see the ramifications of tariff gate, if you like, of what really happened in February and, the consequences for a lot of the companies. So I think it's going to be a very, very important earnings season. So I think there's a lot to look forward to over the next few weeks and month. I think it's going to be very exciting. So we definitely want to be identifying momentum while it's here.
Yeah, so what we'll do is we'll break down a chart here and we'll just have a quick look at what you mentioned in terms of a very key point. So whenever you're doing anything with momentum, you always want to be also understanding key levels. And that is levels where you might see huge shifts or potentially a coiling zone. So we've actually got one of those coils at the moment happening on cryptocurrency in terms of Bitcoin and Ethereum. We'll go through that a little bit later on. But you'll notice here, if you're a bit of a trendline fan, that we're basically smack bang on or very close to one of the big key trend lines of the last couple of years. And that was the one that started the kind of 2022 fall. Then, of course, the most recent fall here in 2025. And we've made it back to this trend line again. And we've done it in record time. I think it's like the third fastest pickup ever. So whenever we're looking for momentum moves, we always have to ask ourselves the question of, are we coming off a very key level? And have we found what we call a pullback in time or some form of, would say like consolidation before breaking out? One of my favorite things with any type of momentum strategy is to understand the trend. So I asked kind of the community here that's right here right now in terms of the live session, what kind of trend do you think we're in at the moment? Are we in a bullish trend on the monthly, on the weekly, on the daily? What trend are you seeing? And this is the first place I always like to start when it comes to momentum. Obviously, you can see here the answers are coming in monthly up. Absolutely. Monthly, weekly, and daily, you're going to pretty much argue, or not even argue, it's pretty much up at the moment. So what you'd be looking for when it comes to momentum is you would have been looking for further movement into that particular trend. So what we've seen recently is we've had a couple of these pullbacks in time that have gone through the overall trend, which has been bullish. And what I like to do with these, and we've talked about this a little bit, is to recognize that these levels are structure, to recognize that generally the trend is up. So that means the flows are up and the biggest money on the weekly, monthlies, dailies is of course going up. And then what I want to do is I want to use the breakouts of these ranges as structure for me to get involved in the markets. And the reason we do something like this is because, of course, Ty, we want to be able to use the idea of patience and then reacting to the market to tell us the direction it's going in. If the markets break into the upside and our monthly, our weekly, and our daily are all technically to the upside, even though you may think it's overbought, that's actually a big rookie mistake, isn't it, when it comes to momentum trading? It doesn't matter what an indicator says, like an RSI that says overbought, it can stay overbought for a while.
Absolutely, it can. And quite often, just the way they're actually designed and the way they actually submit their information, they're designed to actually stay in overbought levels in a momentum moving market. When the price is up, you've got to remember that those indicators, for the most part, are usually they're using data from the last 14 periods on whatever time frame they're on. So it stands to reason that if a market is very, very strong, those readings are going to be extraordinarily high, whether it's RSI, stochastic, all of those generally using a 14-day or a 14 period, whichever time frame you're on, to actually gather that data. So by pure consequence of markets being up, those indicators are going to be overbought. And same for the way down. Markets that are going down heavily are going to be oversold, and they can stay oversold for a very, very long time until a market corrects. So it's foolhardy at best to be believing that the overbought is going to be a reversal in the market, because it can stay overbought for a very, very long time. And you definitely want to be including price action and paying attention to price action in the first instance, especially when you're looking at momentum, because the best way to identify momentum is to look at the actual price structure and see what price is actually doing, because it's the only real leading indicator. If you're using a lagging indicator, which nearly every indicator is, to determine when a market is actually starting to slow down or stop, then you're playing a very dangerous game. It's really a guessing game at that point, and most of the time you're going to get burned, especially in an aggressive trend.
Let's break down this S&P, and then we'll jump over to the dollar, because I think the US dollar has really shown this a little bit more exemplary recently. But we knew the trend was up, and we knew that a while ago. Of course, we've known that now for the last pretty much month and a half, and the market's just kept going higher and higher and higher. And each time we've gotten to a bearish zone, such as we're almost reaching right now in the S&P, the market is consolidated, and then it's ended up breaking higher. But remember, the first key is don't predict this. Basically, look for the market to actually show you which direction it wants to go in. Now, what you'll notice is that the market had these three areas: a support here, a support here, and a support here. And they were all pretty much equal on the same price. And then, of course, a gap happened over some news, and we actually went under that price and quickly started to reverse. Excuse me. Sorry about that. Hopefully no one's ears got blown off then. I think I saved you. Then the trend was too strong. So then basically we gapped down and we started to move to the upside. And when this happened, this is a classic steal kind of technique by the market. And when it took out this previous high, that was a great case of being reactive to the market and saying, okay, the market's ready to move. And you may have been watching our videos that we do here for Pepperstone, or even potentially watching our show that we do on our channel. And one of the things that we talked about is as soon as we broke through that 60-60 zone, it was just basically bullish. And that's because the market created a structure that looked like it was going to squeeze, because it had those signs. It had the low take, it had a rally. And what I usually do when that occurs is I put an anchored VWAP behind it. Now, this case, the market was just so aggressive. So there are two ways we can take an entry, aren't there, Ty? So one of those is just buy and put a stop loss below the low. And the other one is we could say scale in. And most of the biggest traders in the world, they tend to scale, don't they? So we might have said, okay, take half a trade off here and buy, and then half a trade on a pullback to something like a moving average or an anchored VWAP. So whenever you're trading momentum, use market adaptive indicators. And also, of course, make sure that you're generally in the direction of those larger timeframe trends. And if this happens like you just see here on the S&P, it's very clear that you don't want to say overbought. You want to keep going with it.
Most definitely.
All right. Yeah. Let's actually go the dollar, because I think the dollar really exemplifies this and everything we've been talking about. So again, you've been watching probably the show for a while, and you would know that we've been bearish on the dollar. Now, the main reason we've been bearish on the dollar is because the weekly, the monthly, and the daily trends have been which direction? Downside. And what we've been doing is, of course, a very similar concept of recognizing when markets are getting back towards key levels, such as potentially supply areas, or breaking to the downside after consolidating for a while, and saying, well, there's probably a pretty good chance that it's going to continuously move towards the next level. And in this case, we have a lot of market structure on the left-hand side as well. So some of the tips that we would be looking at is, number one, we want to be trading that direction of trend as much as we can. Number two, we want to recognize patterns. Hi, what's the pattern that you would usually say to almost anyone here on the daily that's worthwhile paying attention to, especially even where we are right now?
Yeah, the lightning bolts are the ones we're always paying attention to.
Yep. So lightning bolts, so that's declining,
absolutely.
Market like this. And of course, your favorite, which is the 20 moving average
20
daily,
moving average.
which again has been an excellent pullback zone. 1, 2, 3, 4 pullbacks. And we don't know yet that it's going to respect it, but at least historically so far, it has done so. So that's giving us a little bit of edge on that position, isn't it? And what we could then
Most
do as
definitely.
scalpers
Yeah.
is drive into the smaller time frames, look for a lightning bolt switch on the 1 minute, 5 minute, 15-minute chart. If that occurs, probably stronger than a normal trade you'd be taking.
I think the dollar index is a perfect example of technical analysis 101. Like we could literally teach you a course on technical analysis just using the dollar index and the euro really, and the way it's been technically sound. It's just been, yeah, it's what we talk about. We've been talking about this for, it's coming on 15 years now, Tom, and really our vocabulary around it has not changed, and that's because the market has not changed. It's the same thing over and over again. And I think when you understand what you're looking for, especially on on patterns like this, it makes it really really easy to set up and actually trade it. So I think it's great.
Yeah. One of the things we have added, and of course this is on the platform of TradingView with Pepperstone attached, is anchored VWAP. Now, anchored VWAP wasn't really a major tool when we first started all those years ago, even before that, but it has become one that's very, very popular. And why we like anchored VWAP is because effectively it allows us to kind of be market adaptive to the move, and also to be weighted, of course, against that volume. So what we're tending to see, not so much on the dollar index, but on especially S&P 500, on commodities as well, gold, silver, those types of commodities, is that it's an excellent tool for putting behind the last swing highs and lows, and then for being able to get extra little pullbacks. So what you've noticed here is I put one above this high, it pulls back after selling off, and of course at this point, we're starting to get a pretty good idea that the market is probably on the decline. And then it comes back to that area, sells off. It comes back to that area later on and sells off. What we could then do is we could say, okay, well, we know the trend's down. We may have missed the first entry, but what about the second entry? Could we have put a anchored VWAP above this high? The market starts to sell, creates a gap, rallies up, comes back, touches it. First touch is the key, always the first touch. That's in the direction towards the short. We could then short it. It does go down. Obviously, it doesn't keep going super low, but it still moves considerably. And that could be an extra little trade that you could do, like a scalp that you could do on top of it. So it's excellent for being able to pick up those momentum position shifts. So I guess the tips really here today are follow that trend, look for breakouts into the direction of trend. The more overbought, I find, the more ridiculous some of those old indicators are, some of the stochastics or the RSIs or the most ridiculous, like overbought things you've ever seen in your life, and you think it can't keep happening. I'm tending to find, especially in the last couple of years, they tend to be very, very good trades. Has anyone else noticed that in the chat, where something seems so ridiculous, but then it just keeps breaking up or up and up and up and up and up, and every single time it does that consolidation, it breaks into the direction of trend. It's super overbought, and then it just kind of keeps going, or it breaks down and it's super oversold and it keeps going. When the US dollar, I think, is the most sold it's been in like a decade. So, again, what's it been doing? It's been selling off. Did we know it was the most sold it's been in a decade 2 weeks ago? Yeah, of course we did. Yeah. But that doesn't change the fact that the trend up until it hit 96 and hit the next level of equilibrium was continuously down. So really the strategy is to get involved. Daily 20 breaks of structure on the way down using the anchored VWAP strategy. Super basic, but works really well. And I would argue that you probably had about 10 trades plus in the euro and the dollar just using this kind of strategy.
In the last couple of weeks. And look, here we go. Sure. Yeah, absolutely. And look, I'm going to put this out to everybody. Let's just see if everybody's just here for just listening purpose, or are you learning something? What is it going to take for us to change our mind on the dollar index on a daily chart? What
daily?
Would it take?
Daily?
Yeah. Let's go to a daily chart. Tell us, please, in the questions or the comments, what's it going to take to change our view on this downtrend on the dollar index? Okay, it's very, very straightforward and very, very simple actually, and I'm hoping that everybody knows it, because it's a really, really important thing, because that's when you know that you're no longer taking shorts. It's very, very important to understand when a market has actually stopped trending in a direction and it's about to change over. So take your time, give us the comments. what is it going to take for us to start looking at long opportunities on the dollar index? Okay.
Well,
And
while we
think
wait
about
for that
moving it.
answer, we've got a couple other questions coming in. Stuart says, I agree. We tend to see more extreme moves at the moment. Yep, for sure. I think zero DTE options and other things are flowing that. And then, of course, Craig says here, hey, Ty and Tom, coming in from Thailand. Well, I hope you're having a good time in Thailand and maybe enjoying some of that delicious food. Tell you what, I've had some of the best fish I ever had in Thailand, actually. They've got delicious fish. All right, let's go to the next one while we wait for that answer, Ty, that's coming through. I'm sure a few people seem to be answering it. Do you want it, now that it's been answered by a few people, do you want to go through what you'd be looking for?
Yeah, absolutely. So what we are looking for is a break. Well, pretty straightforward. In the first instance, what we certainly want to see is a break of that 20 moving average and a close above it. But most importantly, we want to see a reversal of those lightning bolts. It's very, very important that the lightning bolts that we've talked about on the way down, they are the only things that can reverse a trend to actually put it back on course for the up. So in a perfect world, what we'd see here is a little bit of a pullback or even maybe a break of this 20 moving average, come back and retest it, make a higher low, very, very important that it makes a higher low, and then breaks to a new high. And what that really establishes is the prevailing trend on the bigger time frame has actually turned around. Okay, so it's given, and the daily is the important one because that gives us enough time for buyers to consider the area. And it takes a little while. A change of trend doesn't happen in a couple of days on a daily chart. It could take a couple of weeks, actually. So that means that the area has been considered properly and that move is going to play out. So yes, for everyone who got that right, correct. Very good.
Yep. Well done, everybody. All right, so let's move over to gold, silver. Actually, I'll just do silver here first. So silver's pretty much a classic case. We're looking at the monthly, we're looking at the weekly, we're looking at the daily. You're going to probably argue it's in an upward trend. So in general, at this stage anyway, you're looking at this and saying, okay, well, what is this? Well, could it be a pit, a pullback in time? Is this likely to be a consolidation area? Now, we don't know it's going to break to the upside. Obviously, I would be biased towards the upside because the trends generally are going that way. But of course, if it breaks to the downside, there may be a trade. And if it breaks to the upside, it's likely going to be fairly strong because, of course, now it has been sitting for a while. I mean, if you counted how long it's been here for, looks like it's been here for barely about 3-4 weeks. And that's a great amount of time. That allows a lot of those indicators we were talking about before to reset. And again, you'll notice that one of our favorite moving averages, the 20, has been held on the daily, which is very important. So each time it holds, what is the reaction of the market? The reaction of the market is to create a giant wick, and wicks are pretty aggressive. That basically means someone really likes what they see there at that price. So maybe they think that's cheap or fair value, and or cheap. Let's go with cheap, and they're liking that price at least for now. So the market's driving higher, and this helps us as scalpers and day traders and everything to know a few levels. Number one, we've got something like 37.20, 37-ish. If we manage to close above there, that we could be on for a really big momentum shift. Because, Ty, we've seen a huge coil or a pullback in time. And it's really important to think of it as the most important asset or most important thing that we all have is time. So the market is no different. The market values time as well. If you've ever traded an option, a huge component of the option is timing, and you pay for time. That is pretty much, in essence, a huge component of it. So why is this important? Well, if it's sat there and done nothing, then comparatively, it should theoretically be, an asset should appreciate over time. So if it's done nothing, let's say for years, then it's maybe behind. So it could have one of those epic movements. In this case, it's resetting indicators and allowing itself. So if this broke above 37, Ty, what would we be doing? We'd be looking for, touches to 20 moving average on the small time frame, anchored VWAP off this area. And
Absolutely.
We'd be more confident, wouldn't we, in the bullish break because, well, generally speaking, it's bullish flow, isn't it?
Yeah, and I think that's the wonderful thing about technical analysis. I think, and that's why I think the learning curve is actually quite it's smaller than people think, because what we're actually looking for in essence is the same replicable patterns on a smaller time frame to actually show what the bigger time frame is actually telling us to do. So we're not actually employing a new strategy. We're just actually going to a smaller one, a smaller time frame, and employing the larger strategy on the smaller time frame to give us the breakout to get us into the market. And trading can be as simple as that. I think people like to overcomplicate trading because I think they feel that the more they encompass so many different strategies, the more chance they've got. But yeah, we've learned really that keeping it as simple as you possibly can and applying the same basic strategies is really the key to success. And you don't need a lot of fancy fanfare to actually get good results. It's really replicable systems. And when you go to a smaller time frame, you're really applying the exact same things you are on the bigger time frame, just on the smaller. Pullbacks to a trending moving average, lightning bolts. That's what's signaling the trade. And yeah, trading in the direction of the bigger prevailing trend. Yeah, we all obviously know why that's so important, but it really is as simple as going to the smaller time frames and just looking for the exact same thing.
Yeah, exactly. So we know now, based on the higher time frames, that a 37.20 is a pretty important zone. We know that currently the market has been making a couple of little lower highs here, but not lower lows. So what does that mean? It means that, again, we're in a pit or a coiled market. We don't know that we know that the general trend is up, but we don't have a clear direction on this 4-hour chart. And as we dial in, remember the structure doesn't really change. I mean, it is what it is. That was on the 4-hour, we're going to see the same thing as we do here on the 2-hour, which is a market that's not quite sure which way it wants to break out yet. It does break to the upside, though. There'd be more strength in that momentum. And I think I really want to reiterate this to everyone out there. I feel like this is where most traders and investors go wrong, is that they don't understand that if you follow the general flow a little bit more, you tend to get more explosive moves. And more importantly, you have the power of the numbers behind you and generally the narrative. So if it's breaking up into the direction of the current narrative, that's a lot stronger than going against the tide. You know, when they say with a rip that a lot of you don't really want to swim. You swim against the rip, do you, Ty? You want to swim across the rip. Ideally, if you swim against the rip, you'll probably be tired pretty quickly. So in this case, we don't want to fight the system either. We don't want to fight the way that markets are. And I think most traders and investors tend to want to think that they're smarter than the markets and that we can beat it. I know I was the same way. I know most people are. And
we all are at the start.
I found like that's probably like 95% of traders' problems is that most of it comes back to thinking that we know better and not humbling ourselves. And I always say that the market is the great kind of equalizer. It humbles us more than pretty much anything else really can. And in this case, for me, if it broke to the upside, I'd be a lot stronger on it than breaking to the downside. And I may also just choose as a trader, well, I don't want to trade it if it goes to the downside. Why do you have to? See, you have the ability to have that abundance mindset. Who cares? Move on to the next one. With Pepperstone, you have so many different trading pairs. And although, one of the things is it's really frustrating when a good plan doesn't play out, it's one of those things that it's just how it is. We're playing chess, not checkers. So we need to always say that sometimes it's inevitable that we can't trade. And that's why we keep rattling on about this patience concept every single time we do these. So
it's so important. Yeah. And I think once you learn patience, you've got a long way to being a success at trading. I think that's fair to say. Every successful trader that I've ever met has patience as one of their key attributes. And we've met a lot.
Temperament is a big word. Yeah. Let's go over to Bitcoin for a second here. So again, a couple of markets there. We've got gold trapped. We've got silver trapped a little bit at the moment.
Trapped.
Obviously, both bullish technically on the higher timeframes. Bitcoin, very similar. It's bullish on higher timeframes, but it is really trapped. And as a day trader or as a scalper, you're going to be sitting there saying, well, I'm going to buy the low and I'm going to sell the high and I'm going to buy the low and I'm going to sell the high. What inevitably happens to most people is that they forget to put a stop loss or they start moving the stop loss behind. And one time they sell the high and then they get squeezed out and they become part of the problem. So again, sometimes it's better, unless that's your trading system, to say, okay, well, I know on these higher timeframes what I'm looking for. I know what kind of level I want to see broken through. And if that happens, then I'm going to, enter based on the momentum of the move. And if you do these in some stocks, you do tend to find that you get these really, really nice moves. And you'll notice here it's very coiled. I mean, again, series of lower highs, equal lows, lower high at this stage. We don't know if it's going to be a lower low or anything, but it looks weak to some traders. But it hasn't really gone anywhere, has it, Ty?
No, no, that's right. Exactly. It's really coiling, and we talk about that a lot. But until it breaks that low, if it's not making lower lows, it's not changing trend. All it's
Yeah.
doing is actually finding yeah, consolidation there, and it's very, very important to understand that. Like, even though it looks like it's making lower highs, which it is, it's not making any lower lows from that base, and that's the important part you got to take away from that.
Yeah. So really important to always consider that type of thing. And if you go back to the weekly here on Bitcoin, you'll notice again the weekly close was relatively strong. It's pulled back, it's come back up, it's hit this equal high, and it's just getting ready. Like this is one of those classics. I think I wrote like a note about it about 48 hours ago. And in the note, I said, what have I said here? So I said textbook basing pattern near all-time highs. And obviously in terms of the macro side, we've got stable coins going mainstream at the moment. Tokenization of everything, it seems. Everyone knows what everyone's talking about tokenization now. Obviously, volume is starting to dry up because of the MSTR style clones. If you're not aware of those, that's happening. This is all extracurricular news kind of stuff, but it does help. And then, of course, US dollar has tended to be weak recently. So I just had those as a couple of notes. And although they are narratives, remember what gets, I say if it's in the press, it's in the price. But what tends to get a good momentum strategy going on is the build out of these narratives. Oh, tokenization, the next second coming of whatever, buying assets. Suddenly the thing is squeezing and it's gone to 140,000 or something like that. Why could that happen? The thing about Bitcoin is nice is when you have those storylines and it breaks in towards the opposite, the positive direction, it can be a bonanza more so than anything else, I think, in the markets. Yeah. Anyway,
Absolutely.
that's not a solicitation to do anything. It's just some notes that I've written. And obviously at the moment we are coiling. Okay. So US 500 critical level tie. Russell is similar. If you always like the Russell, let's talk about this. It's getting close to that pretty heavy resistance, isn't it?
Absolutely. What I like about the Russell is it's actually got resistance in front of it. And I think that actually it's a good thing for trading because I think it makes it an easier trade. Because trading with a direction or a previous direction is always easier than into uncharted territory, which is what a lot of the S&P and Nasdaq trades would be right now, and even the UK and even the DAX. All of those are heading into uncharted territory where there's always that danger that could turn around very quickly and reverse. Whereas the Russell's got targets everywhere. And in my mind, if we do see a resurgence of some of these breakouts, like I say, the S&P breaks out to a new high and starts to trend, it's going to be easy to trade the Russell because it's actually got more ground to make up and it's got targets that have already been there. So in other words, it's going to be a lot easier to get to 2320 on the Russell than it is to get to 6,400 on the S&P because it's already been there. Okay, so it's the easier trade, and really, you look, trading probably has the most amount of cliches that actually make sense to what actually happens, and trading trading in the way where there is the least path of resistance is one of them, and that's actually trading with momentum. So that's in my mind. 2320 is the next target for the Russell. It's flagging a little bit. I agree with that. I think that it could easily be flagging, and the easy take profit there is going to be the 2300. And all it's going to take is a little bit of a breakout on the S&P 500 or the NAS, and off it goes. And this to me is my favorite of the three indices at the moment because it's the one that has a little bit more directional gravitational pull than the other two. The other two are going into uncharted to go long. This one's got plenty in front of it that it can reach before it gets to an all-time high.
And I'll give everyone a little bit of a hint when you're looking at these things. So if we put in a US 2K versus US 500, you end up getting like a ratio, and that ratio can kind of show you whether the Russell is doing better or worse versus the S&P. And you'll notice that at least in the last kind of week or two, we've started to see a little bit of a pickup here in the Russell. So the Russell is actually starting to see a rotation. And that also helps when you're thinking about these momentum strategies. It helps to build your confidence in that type of thing. So although it hasn't broken out, as Ty said, the obvious answer is if it does break 2300-ish, 2320, that kind of zone would be the target, at least technically. And like anything, you've got to recognize there are certain risks. But it's really, really good to generally be in the direction of trend because, of course, yes, the trend's going to eventually end. It is what it is. But if you've managed to stick with it for a while and recognize them relatively early by recognizing lightning bolts, etc., that can get you into generally quite a few quality trades before that trend is over. And today we've gone through that anchored VWAP version and of course a few others. So we've done those ones. We've done a bit of Bitcoin. We've shown the markets here. Another one that I thought might be worthwhile just bringing up is kind of more close to home this week, and that's the Australian dollar. Now, for a lot of people, this will be a head-scratching moment. I think like 100% of economists or very close believed we were going to get an interest rate cut this week, Ty. And of course, we didn't get one. And then that makes people feel very strongly about where the dollar is going to go to next. I had people saying, I want to short the dollar now. I had people saying, I want to long the dollar because we're not going to do rate cuts again or anything. I'd say hold back on the opinions here in currencies like that and instead just trade the patterns. So at the moment, what's been happening? Well, the market has been steadily gaining, but it's been incredibly choppy. And this is not what I would call like a market that a momentum trader probably wants to be involved in. Would you, Ty? Because this is up, down. One day you're up, one day, next day, 2 days you're down. The next day you're up, next day, 2 days you're down. And what this is good for is a range-bound trader or someone that's, maybe just looking at the upside and looking at a macro side. But if you're looking for momentum, you want to come in and see this type of thing, touching of the 20 moving average. If I came in here, I'd be like, yeah, that looks like an excellent trend. Keep following it. And you can see how long it went on because there was a classic good move. But that looks tough. So sometimes you've got to know what you're looking for as well.
This is one you'd leave alone for now.
Yeah. A lot of people with a lot of opinions, but obviously a lot of confusion if you have 100% of economists thinking something's going to... And look, truth be told, I thought they may cut it. I thought this month, next month, there'd be a cut. And so it's not like I'm the guru of calling that pick. Of course, that's not really what it's about. But being able to pick an interest rate cut or a hike doesn't make you a trader, does it, Ty? In fact, you're better off usually just following the flows and following the momentum and following the TA and leaving your opinions generally usually wrong on these things, which I found, again, the market is the great equalizer. So we've got the Aussie. We've obviously got the S&P at a very critical level this week, guys. We've seen gold and silver at the coiling zones. We've also got Bitcoin, Ethereum, and some of these other cryptos at coiling zones. And then, oil is struggling around, after a very volatile week. So I think what this tells us, and Tyra and I alluded to this at the beginning, is that we're probably going to see a couple of large breakouts. And we don't know, of course, if you were guessing, you would say gold, silver in the direction of the monthly. So that'd be more towards the bull side, Bitcoin more towards the bull side, and obviously the S&P more towards the bull side. But we do find that precipice area for the S&P, which is the biggest trend line we've had in quite a while. So Ty, I'm looking forward to doing our next week session. Remember, we are back to weeklies now after that live session we did last week. So I'm really looking forward to next week and going through it with everybody, and hopefully we can get to the bottom of whether we've got a nice breakout and some momentum trading we can bring on top.
I think the next 4 to 6 weeks are going to be the most interesting weeks that we've seen in 2025.
Yeah, and I'll give a shout out to of course, Pepperstone's Chris Weston as well, because he did make this nice little form here, which I think is pretty sweet, over on his X account. And you can see here that he has a couple of big reads. Just remember, we kick off earnings season big time next week with JP Morgan, and then we've got the US CPI. So both of those together, well worthwhile, considering the 15th of July is going to be, I think, a fairly volatile event. From all of us here at Pepperstone, thank you so much for joining us. We hope you enjoyed. Make sure to follow in the links in the description down below if you're watching this in video format. And we'll look forward to seeing you next week, guys. Thank you so much.
Thanks, everyone.